Well, hey there, everyone. This is Dave Dubeau with another episode of the Property Profits Real Estate Podcast. And today, all the way from beautiful Toronto, Ontario, we've got Michael Kharlab. How are you doing today, Michael?
Amazing. Thank you for having me.
My pleasure. So Michael is a very interesting and accomplished real estate entrepreneur. He's been investing in real estate for about 10 years now. He's done a variety of different things, all the way from rent to own to duplex conversions. And now he's into some very, very cool stuff, development type deals with a twist, both in the United States as well as in Canada. So Michael, really looking forward to finding out a little bit more about your unique twist on real estate investing these days. But to start with, what was it that got you involved in real estate in the first place?
Okay, so I come from the corporate world. Spent about 20 years in IT, and about in January 2007, I got a very unpleasant call from the human resources. One day, I just was shown the door, and the company was optimizing 10% of workforce. So at that time, I figured out I needed some supplementary income for myself, and I started looking at different opportunities. Real estate came to my life in 2010. A friend of mine came from Montreal and said that he bought a condo in Miami. And that was, right after the crash of 2008 and 9. And I know it was bad, but I didn't know it was that bad. So I looked at the prices, and a month after I was on the plane to Florida, and my friend and I just bought the first condo. Then we bought another one, and we never looked back. So that was my beginning. So I was looking for something. Just real estate came to my life. I guess that was meant to be.
Yeah. So tell me a little bit. Your friend kind of gave you the basic education, but then you got a lot more formal education about real estate investing as well. Tell us a little bit about your journey from those first couple of condos. How did things progress after that?
Yeah, so we've done, we bought 2 condos and couldn't do anything else for almost 2 years because nobody was giving mortgages in Canada or US. But then they started giving mortgages in US. The prices of our condos went up, and we pulled a little bit of money out of that. We partnered up with other guys, and we bought a triplex. And then my brother invited me to come to a preview of a course, real estate investment course, featured, Robert Kiyosaki, the famous creator of the Rich Dad Poor Dad. So I came to the preview class, and I was just hooked. So I took the classes of what's called today legacy education. Yeah. The strategies I've never heard of. So I took the classes. I took a mentorship package. I took a mentor, somebody who just not teaching you a theory, just shows you what needs to be done. Explained to me what I need to do in real estate, and it just took off. I guess I never looked back.
So, okay, so what did you start doing? Because you've done a lot of different things. So got those condos, and what were the next? You got the triplex. Then what did that progress into?
Yeah, so my mentor told me, Michael, listen, there's something special about you. You're engineer on one side, but you can talk. Normal engineers cannot explain themselves. So he told me, listen, there's 2 types of people in the real estate. There are people with money, they're looking for deals, and there are people who have deals, just have no idea how to market them. Yeah. I said, well, don't you broker? So what I've done, I found some people within legacy, people very successful, and I said, well, I'm going to work with you. Let's expand your business. And I start gradually bringing investors to our partnerships. But me doing it, from integrity point of view and also learning, I had to do it on my own. So I started doing rent-to-owns in the beginning, and started learning about investing in mortgages. And then we went into duplex conversion. So I progressed from strategy to strategy. But I've done about probably in that partnership about 15 rent-to-owns. That was the beginning after that.
All right. And duplex conversions, when you say that, are you talking about taking a single-family home and adding a suite to it?
Yes, and very important word. Yes, but very important word is a legal suite, because many people legal. Yeah, many people convert basements, put tenants, and God forbid something happens. You could be on a hook. So we were working just north of Ontario in the city of Barrie. Yeah. We were working with the city, getting permits. So basically, you take a single home and you create two suites. You put 2 tenants, 2 incomes, And just it was a good strategy for the time being.
Mm-hmm. All right. So that was how you got your start. Now you're into something kind of quite different. So tell us a little bit about your new strategy that you're focusing on, primarily in the States.
Yeah. So in around 2016, the prices in GTA or Greater Toronto area went up by almost 30%. And they went up fast and they went down even faster in the spring of 2017 when the government stepped in. They changed the mortgage rules. So it was hard to do any deals in Toronto or Toronto area. So we started looking into different possibilities, opportunities, or areas. Now, I've never left United States. Still have properties in Florida. So we started looking into different markets. And I tried Texas for the time being, but I couldn't just close deals. And then Arizona came to us and was some developer looking for help. So I was in Arizona in 2014. Again, couldn't establish anything, but this time it was right. So we went to Arizona in summer of 2017. We partnered up with the developer. We did a small deal in the beginning, and then we started doing more deals. Our name became more famous in Arizona, and developers started coming to us. So we've been partnering with a variety of developers locally. It's boots on the ground because we're in Toronto, and that works well. So those developers typically need money because the banks in the US, as well in Canada, do not lend as much as they used to. And now they're open to opportunities, bringing investors. They used to work with their own funds prior to the crash of 2008, and many of them lost a lot. So now they want to be risk averse and they bring investors. So this is where we come. We come with our group of investors. We become partners in deals, and we bring our expertise to the deal as well. So that's what we've been doing. Done several development projects. We also bought an office building in downtown Phoenix. That's a conversion.
Into what?
It was an old office building, just that we won an RFP along with one of our partners. Mm-hmm. City used to own it. One of the very popular trends today is something called co-working, or co-living.
Yeah.
So we create shared office space in that building, and that's going to be probably for small companies that come just to work, and also for medical purposes. So medical offices, that's what we're trying to do there.
Now, did you say co-living as well? So are you going to have some residential part in there too?
It's mainly for students. So
in that same office.
Yeah. So if the city allows us, and we're trying to get that, there are many students in downtown Phoenix today, and they need a place to live. So we were trying to convert some of the floors of the building to smaller rooms for students to share.
So kind of like mini suites or
it's shared rooms. Yeah, shared rooms with, let's say, one bathroom for every 3 rooms.
Right, and a kitchen.
Kitchen, yes.
Yeah.
That's the idea.
Interesting. Okay, so let's take a look at the development deals, because we were talking a little bit off camera about that. Very, very interesting. And you call these build to rent communities. If I got it right.
Build for rent, yes.
Build for rent communities. Explain that to us, because that was kind of a new concept for me to hear about that.
Well, that's good to know. Something I could share with you. Yes. So what happens in the United States right now is that many people decided not to buy anymore, and they actually switch to, they go to renting instead. Many millennials. So they saw parents losing a lot of money during the crash of 2008. And in some cases, parents own the mortgages are higher today than the what the property is worth.
Yeah.
So they said, you know what, we don't want to buy. We're okay renting. And it's nothing new for United States. There's always apartments that were built. But the new trend that's happening now is that developers coming and building communities. It's called gated communities. And they've done it for many, many years, but normally for buyers.
Right.
Normally you would come, there's a community with a security guard, and you've got either townhomes or single family homes within that community. So the concept now is to do that for renters. And there are people, we call them premium renters, It's approximately 10% of all the rental population of the United States. They're okay paying more. They want a nice living space, and they want a swimming pool, they want a gym, and they want something new. So it's a brand new community dedicated to renters, and it's just theirs, and it's gated, so you just cannot walk in. And it works magically. The numbers are amazing. So we've done on a smaller scale several projects, and now we're looking into larger communities.
So, Michael, give me an example of what kind of, so it's a townhome or a smaller home, what kind of square footage are we talking about? And what are you typically charging for rent for these kind of properties compared to a traditional rental home down a few blocks away?
Yeah, so I'd say typically it's either 1 or 2 bedroom.
Okay.
So 1 bedroom probably would be, let's say, $1,100, and 2 bedroom would be between 15 to 18. Plus, the communities I've seen it. This is what we plan on doing. We also convert them to smart homes. So you get the security system and cable and everything else. So there's additional charge for that. So we're looking at approximately $2,000 for a small 2-bedroom home, which is very nice.
And what would that rent for down the street in a typical rental?
I'd say we would charge 20% premium to that.
20%
more
premium.
or less, yeah.
Very nice. So you guys go in, you work with the developer, you guys bring your capital, you bring your expertise to the deal, and you build these communities. Then what do? Do you hold on to them for the long term, or do you sell them, and who do you sell them to?
Yeah, on this size, and we're talking about 100 plus units, you're talking about large companies going in. So let's say take an insurance company, for example. If you ever wonder what happens with the premium, insurance premium you pay every month, what do they do with that? So normally they would invest in something which is very, very low risk. Yeah. And they also say pay 5-6% on the money they invested, but they're not in development business. They're in business of having your money secure but making some money out of it. So the large companies who are not into development, funds, real estate investment trusts, as I mentioned, the insurance companies, this is typical buyers, and they're looking for deals like that on a big scale. So they wouldn't look normally at deals, let's say, less than $10 million.
Right. So right now you've been focusing on smaller communities.
Yes.
Have you been holding on to them, or who have you been selling those communities to?
So we're part of 2 projects that were sold, and because of the size of those projects, they were sold to private investors.
Okay.
And one was just shy of $8 million, and another one was a little more than 4. So those type of deals are too small for insurance companies or for the funds. So those we sold to private investors.
Yeah, well, I mean, it's a beautiful setup, right? The investor who buys it is buying a turnkey business that's already set up. It's brand new. It's got premium tenants. It's getting premium rents. They're probably paying a premium price for it, but they're okay with it because fewer headaches.
Yeah, AAA tenants, low maintenance, brand new, so nothing breaks.
Yeah, no, that's
there's warranty for the first 12 months. Yeah.
So just out of curiosity, Michael, how did you start? So it sounds like you're bringing investors and capital to the table. How did you start, and what do you do to get your investor partners on board? What are you guys up to for attracting investors?
So my niche, I call it is business professionals.
Okay.
So I come from the IT world, where I spent, as I mentioned, 20 years.
Yeah.
And these are very intelligent people making very good money. And the problem in engineering is that people get burned. They work crazy hours. It's a high-paced environment. Sometimes people need to work on weekends. And let's say in the software world, they implement something and then they break something that used to work before. So it's a lot. Yeah. Typically, after age of 45, not for everyone, but on average, they want to start thinking about getting out. Now, it's not easy to get out when you make very solid living. Yeah. So they want to start investing and they need some help. And this is where we come in. So this is the niche. This is the people I've been working with. So I go, I meet with them, I explain what we do, I break it down to what real estate investing is, the options, the strategies. And for them, it's very convenient because they don't need to do anything,
Right.
and they don't need to deal with tenants. They don't need to take a mortgage. So there is investment amount they need to put in, and pretty much everything else is done for them. So
very nice.
That's what I've been doing for the past several years.
So are you focusing primarily on accredited investors, or are these folks just successful, professionals? Are you kind of meeting them through networking or referrals? What works best for you for meeting these kind of folks these days?
Yeah, for me, it's been referrals at this point of time. With marketing to the cold market, need to be very careful to be in compliance. Yeah. I don't need to tell you that. I cannot advertise. So mainly it's referrals. It's people that work with us, have been investing with us, and they introduce us to new people, and there's a process we go through. Obviously, we need to qualify, make sure people are knowing what they're doing and not putting the last money into the deal. That's for sure.
Makes sense. Michael, this has been a lot of fun. Time flies when we're talking about interesting stuff, but I want to thank you very much for sharing what for me is a pretty new concept, this whole build to rent concept around communities. Yep. That's very, very cool. I'm actually going to be going down to Phoenix in the next couple of weeks. If I have time, I might swing by and take a look at what one of these projects looks like if you're open to that.
I'll be there in 2 weeks.
Oh, well, awesome.
You can see me there.
Awesome. Sounds good. If people want to find out more about you, Michael, what's the best thing for them to do?
Well, there's two things. Number one, people can visit our website, which is www.cfpgroup.ca. And the second one is if people are in Toronto area, we're also establishing investment club. It's education only. We just educate people. It's our way of giving back. It's called Investors Inner Circle. So just go on Facebook, type Investors Inner Circle, and ask to join our group.
Awesome. Michael, thank you very much. It's been a pleasure chatting with you today.
Thank you, Dave. Thank you so much.
All right, everybody, take care, and we'll see you on the next episode. Bye-bye. Well, thanks very much for checking out the Property Profits podcast. If you like what we're doing here, please head on over to iTunes, subscribe, rate us, and leave us a review. Be very, very much appreciated. And if you're looking to create a regular flow of inbound investor inquiries about your real estate deals, then I invite you to attend one of my upcoming live online demonstrations. And you can check that out at investorattractiondemo.com. Take care.